Hey, good afternoon, everyone. Good afternoon. Welcome to the PivotBoss Premium Trading Room. I am Frank Ochoa, aka PivotBoss. Thanks for joining me today. This is our monthly outlook, something I want to do every single month on the first trading day of the month. Just take a look at what has transpired over the last month and what we can look forward to over the next month, and also give some guidance here on what to expect, and also provide perhaps some stock opportunities or analyze any charts that you'd like to look at. I see that someone just wrote NVDA, so thank you. I'll take a look at NVIDIA. And if you all have any other suggestions, please let me know and pop them in there, and I'll try to get to them. I plan to do somewhere around 45 minutes here. I don't want to keep you all day. I know you all have busy afternoons, so thank you all for joining me. What I typically like to do here is take a look at the market from a higher time frame standpoint. And right now, let me just drop this down for a moment, clear up some clutter on the chart. For those of you that have followed my pre-market reports, you know that I typically look at a higher time frame and then kind of drop down into the lower time frame. The way that we approach our analysis is by analyzing the market just from a pure price perspective first, a pure price perspective, and then we take a look at volume, add any key levels, and then from there look for value. And the goal is always to look for opportunities in the market where we're seeing rejection of key prices, and then look to return that price back toward value. Oftentimes you're seeing rejection at the edges of ranges, for example. So if price tries to break through support but fails to push through support, or gets outside of support and cannot find acceptance, that's a perfect opportunity to buy it and bring it back into the range, bring it back into value, and perhaps the opposite side of the range. So that's something that we oftentimes do. At the moment, obviously, we know we've had quite a unique market here over the last 6 to 7 months. And yeah, good question there. In the trading room, do we give entry levels to go short or long on the ES? Yeah, we look at various contracts from the ES, crude oil, NQ, gold, ZB, and others. And absolutely, if there's if price is behaving in a way that we feel comfortable with, if it's great pace and tempo, we'll certainly say this is a great spot right here that we're looking to get long, or we're looking to defend the previous session's low. We're looking for rejection at this level, and we're looking to play it back toward this zone, right? These targets. So absolutely, every single day we have great traders in the room. Chat's one of those traders that is really good about finding those zones that we're looking for in our charts, and being able to pounce on those. He was actually able to get a really great opportunity off the ZB today, off of basically one tick off the low, off our zone. So we'll cover some of that as well. But absolutely, we definitely engage the market here and offer some great opportunities. A lot of our opportunities have been intraday focused here lately, because the swing trading has not been that great overall in terms of the environment. If you look at this chart here of the ES, this is over the last year. Last year offered perhaps some of the best swing trading opportunities that I've seen in a long time. I mean, this was just ripe with opportunities back and forth. But around 4th of July, the market went into a wait and see mode heading into the election, and then from there, after that, you can see what happened here. It's been a low grind up, and then we've kind of went sideways. So in terms of the overall market, I'm still waiting for some more volatility, volume to pick up. We have been trending pretty decently to the upside, but it hasn't really been fantastic for swings. But the day trading opportunities have been there, and our levels have been right on the money. Thanks, chat. I mean, you're fantastic on being able to grab some of those, and many of our traders are. What I do find is, if you have some experience of trading in the past, our net levels and our analysis are pretty spot on usually, and so someone who has experience can come in right away and start using our levels to profit. If you're fairly new to the game, we have some great training at our dashboard. So once you become a member, it's only $19.95 for 2 weeks to give it a try, and then from there we have a 10-part executive training series. so you can learn the various things that how we like to approach the market from an analytical standpoint, from also the tools we use, and also how to enter trades, exit trades, etc. So we get you up and running really quickly, and I think our training is second to none. So a lot of great stuff there at the dashboard, and if you're a Masters member, we got even more bang for the buck there as well. So here's a look at the ES right now. Overall, we've been trending up, and I've been very cautious about this up move. The one thing that has stood out about this move is that once we push through the 2214s here, which is a key level for us, we've never really returned back to it. And what you see here is the creation of an LVN. This is a low volume node. So over here on the right, this shows the volume profile and shows the volume at price. And so these prices, it shows how much volume is traded at those prices. The bigger the node here, the bigger the peak. It tells you the more volume has traded there. The lower the node right here, the lower the valley, shows you that there's not much volume traded there. So that's a rejection zone. So when price pushed through 2214s, it got a huge move up. This pullback right here came just shy of 2214s, got into about 2225, 2228 or so, and then pushed back up to highs. And from there, it's left behind this major LVN. So what I mentioned in the room is if we do swing across this range, this is going to be a fantastic zone to pick it back up and look to defend it for another round of strength. I'm not quite sure if we're going to get that move, because right now there's been very low volume, low volatility, and usually when that's the case, you see more of a melt up overall. But we are seeing signs here of some rejection. You can see here our 2287s last week was a fantastic zone. Price pushed through that area and was able to continue higher, but then it held for a couple of days, and as soon as 2287s gave way, and this is what I mentioned pre-market Monday, if 22.7s is taken out, you're likely going to see this thing rotate back down toward 57s. And we got to move down into that area, and then price rallied here today and again was rejected at 22.85. So very significant rejection that we've already seen right now at 85s. 85 to 87 is a big zone. So at the moment, you can see that should price push through 85, 87, we're going to retest the previous month's high. This is what I call the PivotBoss pivots here. PivotBoss pivots includes the previous high, the previous low, and the previous close, which is this dotted line. And that's of any previous range, whether it's the previous day, previous week, or previous month. So these are monthly pivots, so it's looking at the previous month's high, and the previous month's low price, and the previous month's close. And when you use those three key levels, you can then create the pivot point for the month, which is here. The mid pivot is the high plus low plus close divided by 3. And then you have the midpoint of the previous month's range. So you take this level and this level, you cut it in half, and you get this level. And then from there, whatever distance it is from the pivot to the midpoint, you can then project it up, and that gives you the pivot range. And Mark Fisher famously wrote about that in his book, Logical Trader. So those are the 6 inside levels, right, that are inside the range. And then from there, you can take this range, and then you can take 25% expansion would be this key pivot. I call that S25, 25% support. This is your 50%, 75%, and your 100% expansion is here. And so those are key levels, above and below. So you get it also above price as well, 25, 50, 75, and 100% expansion. So those key levels, that collection of pivots is what I call the PivotBoss pivots. It's as accurate as anything I've seen in terms of pivots, being able to give you key levels to reference. And again, this game is all about identifying rejection. This is an auction, right? The market is an auction. What we're looking to do is identify rejection so we can return price back to value. And so we're constantly looking for new highs, new lows. That's the game. If price pushes up to a new high up here, we're looking for signs of rejection to flip it back. If price pushes back down to lows and finds rejection, it's probably going to go higher. And so right now, 85 to 87 is a major pivot here in the ES. I would say above that level, we'll squeeze into 2300 and perhaps target the 25% expansion for the month. And that's going to be right here at 2314s basically. So 2314 would be the next key level above 2300 to watch. So if we do push through this zone, you're likely going to see a move into 23.14s with a shot to even continue higher depending upon how the market reacts to that level. So right now, this is a little difficult in the fact that we have a very kind of choppy range here. From a swing perspective, I'm not usually excited about some choppy ranges like that. It just kind of screams indecision to me. We do have some key levels to watch, and we just fulfilled some key levels here. So this is the election night right there, that election key range. On the election night, we dropped and then we rallied back up. It left behind a major impulse range. And now that became a major pivot, 21.52.5. And the 50% expansion of that range to the upside was here, and that's 22.14s. So that's a 50% expansion. Once it broke through there, it came right to perfectly the 100% expansion. So that's the 100% expansion of this impulse range. And that's where we're kind of holding around right now. So 22.76.5 has been very important for that reason. And you can see how the market has traded around it. And now 22.76 is basically the previous month's close as well. So what I would say right now, heading into the rest of the month, is how is price going to respond to the previous close? If it goes offered right away, that's going to be an indication that price is going to come down here and test the previous month's low. Because again, this is an auction. So if you're going to take the close offered, that would imply the market's going to seek the previous low to see what's there. And as I mentioned earlier, any push below that low into this LVN is likely going to be heavily defended by bulls. And so right now you have kind of an expanding range that's developing. So if there is any rejection or a failure to get above 85 to 87, I would think that a move into the previous low and into that 14 to 23 zone could be a great target to shoot for. And from there, you could be looking at rejection for a likely return back up and a move perhaps into that 23.14. So that's kind of how I'm seeing it right now. I'm kind of seeing perhaps a little bit of a rollback, and if it does, it could be a great buying opportunity. We've had significant trending markets here overall in many of these contracts, and still you have to play the framework of the current auction, and the current framework is up, up, up. And so every time it pulls back, bulls have been defending, and you have to continue to play that until proven otherwise. At the moment, I would say above 85 to 87 squeezes into 23.14s, but any failure there could start hunting the stops back down into this previous low and into this LVN. So that's a look at the ES right now. And again, that gives you a little bit of an insight, because I always look at the ES first, because that gives us initial insight into what the market may do. It's a broad index, and then from there we can start looking at some stock opportunities. Because if we're expecting a sell-off here over the next week or two, then it's likely that stocks are likely going to pull back as well. And so you'd like to concentrate more on selling some stocks there, or buying puts, or doing whatever. So that's a little look here at the ES. I did want to look at ZB next. ZB has, this is a 30-year Treasury bond futures. This one has been fantastic off of our levels. I included it in our pre-market report this morning, and I'm going to start including it more often in addition to others, and providing more variety and trying to provide more actionable opportunities there, instead of just focusing on the same ones. If they're not doing much, focus on something else that is working. This one has been fantastic. It's given up some key levels, which helped us identify some major moves. We knew giving up certain levels would lead us right to our levels, our targets. If you notice on my chart, I have some pink levels that come out the chart. MCVPOCs, MCVPOCs, a CVPOC. These are micro composite volume points of control, and this is a composite volume point of control. And again, these are looking at the highest nodes on the profile. So the peaks, it's looking for the highest peaks in the profile. And so what we noticed early on was we had lower highs coming into off of these highs, these lower highs coming into that MCVPOC. And when price went offered there, that was an indication that we were likely going to come back to this level here, the next lowest MCVPOC, which is 163. Because if you take value offered at higher prices, the market then sparks a price discovery phase back to previous value. It's going to go seek previous value or create new value. And in this case, it did just that, went right to the level. We also knew that we had a price distribution here with a key level at 160.22. This price distribution was very important for us earlier last year, and a failure to hold it was likely going to result in a push to the next lowest key level, which was the MCP below, and that's 153.21, and we got it. It was a very quick move. Additionally, we had confluence because this impulse move here had a 100% expansion target right to this level. That's 154.07. So the reason I'm mentioning this now is kind of to catch you up on some of the analysis we had, because those levels are now in play again. You can see in the current price range, this MCV, which is 153.21, and this key level here, 154.07, has served as resistance over the last 3 months. This is November, this is December, this is January. We're here, and that's where they're defending. Now, we did find major support here at 147.12, and you can see we had a little bit of an uptrending move here with an ascending wedge that developed. And when we looked at this late last year, I mentioned that this typically implies a push up, and if it does, the retest of that area would likely lead to a return back to 153.21, and we got it. And then once this rejection occurred, it was, whoa, now this thing may come back to 149.12, and this is where bulls want to defend it. And they have so far. Today, the pre-market report discussed watching either 149.12 for a buy opportunity if it got there, but the first buy was to look for this low here at 149.24 for a shot at defending it back to value. And that was a clean move, very, very solid. One tick below it, and then it rallied back off the level. So right now, what that tells us is that value is being defended. This is composite VPOC here, composite VPOC. And with price going bid through it, that's the market saying this is too low, and price rallies. And then when price comes back to this level, bulls are defending yet again and push it higher. So on these retests, you can see bulls are still defending that area. So a very nice support level that we found there. This is indicative of absorption right now. We had a rejection here. And for those of you that were part of the Denver Trading Group presentation that I gave a few Fridays ago, it was dealing with the absorption signature, which is one of my favorite patterns. And this is kind of a hybrid of that. You know, you come down, you spike down, you see a push up, and then on the returns, the pullback legs, you start to see higher support here where bulls, higher time frame bulls, OTF responsive buyers come in and defend there, and they look to return price back up. And so far, that's playing out nicely. And what that would suggest is a likely push higher, perhaps through this 151.11, and maybe all the way back to this high. The only thing, the reason why I'm saying maybe, is because we have a lower high coming into it. So it's going to take a lot of juice to get through this 151.11. But if the market can push through that level, there's going to be clear air to the next pivot, which is 152.14. And then from there, 153.21. So right now, we know one thing. Bulls are positioned here off of the 149.24s. That also tells us that there's sell stops below it that are starting to build now. So if this pattern fails, it's going to break through 149.24. It's going to put a lot of pressure on 149.12 and perhaps seek lower prices. But the one thing I like to note here, this is the previous month's close, this white dotted line. And so far, prices below that level have been bid, which means at the very least, you may rally up into the pivot range to see what it's made of right now. So right now, I think that there's more upside here back toward 153.21. Yeah, this is a 5-year composite. This is a 5-year composite, and the MC VPOCs can be any time frame. But in terms of the composite, VPOC, that's a 5-year. So that's going to take the highest volume node for the 5-year, right? But for the micro composites, it's wherever little mini areas are established as value. So, this 172.16 was established just from this little range, right? This 163 was established from this little bit here and some of this one. This 153 was established mostly from this, right? So I take little bits from each of these, and that gives us something to look out for. So if you're going to take this one off, then you're going to come back to this one, right? If you're going to take that one off, then you're going to come back to this one. So that's how I usually play this. But the composite, I usually base it on 5-year. So right now, very important overall because we have major support down here. I have 147.12 as the last area of support before this thing needs to go test 143.20 with it, which is another micro composite. So this is my next major level down, 146 and 147.12. So again, failure to hold the 149.12s here will put pressure on these two levels, and those are going to be the next two short-term levels to defend, with this one down here to stretch out to. So we have some key levels that have been nice to us. We'll see how this one continues to develop. I know I was so impressed with how this one played out last year off of our levels. It's incredible how precise it's been. It's gotten a little messier here than normal, but I expect it to continue to behave very, very nicely. Let's take a look at crude oil. Here's crude. Crude oil has been very, very quiet. It's making me a little uneasy, to be honest, because crude has had some phenomenal moves. As I mentioned last year, yeah, I mean we've been on top of crude very, very nicely for many years now. We've had every single key range, all the highs, even the lows. We've had every single zone marked very nicely for rejections, but up here, I mean, it's anyone's ball game right now. It's gotten very indecisive. It's not trading like its normal self. I feel like something's up, and I'm being very cautious with it. So this is one where 54s has been defended very, very heavily over the last month plus. So 54 comes across right here. And this is early December. Boom, right? It set off a key range. Here's another rejection. Rejection late December. First trading day of the year, January, rejection. Rejection again, first week. Rejection some more. Meanwhile, so that tells you one thing. It tells you bears, 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 right? They're all defending, and so their buy stops are above those zones. Lots of buy stops. The other thing you see is higher lows. You see higher lows coming into it. So that tells you the first time the bears sold that level, they got paid big. The second time they sold the level, they got paid, but not so much, right? A little bit here and less and less and less. So the bears are getting paid less and less right now. And all of the buy stops are above. So what I mentioned before is above 54s could squeeze big. Above 54s could squeeze really, really big here, but the market hasn't proved that it wants to go yet. It hasn't wanted to even push out of this little 2-point range from 52 to 54. It's been pretty poor, to be honest. There have been some nice intraday moves. The last couple of days have actually offered some great intraday moves, but it's only pushing water around in the bathtub from one side to the other, one side to the other, one side to the other. It's not really going, and I feel like this thing is really, really coiling up for a major, major move. And if there's any rejection, I'd be watching 55.50 right here because that's an LVN in the composite. And if there's any rejection of that level, which also coincides now with the previous month's high, right? So first trading day of the month, we have a previous month's high. It coincides with an LVN. If the market gets up into this zone and starts to form rejection, something like this, a rejection tail, maybe something like that, right? Maybe something where it goes up and smacks down like this. There's many forms of rejection. If there's a rejection there, this could be a major sell. Back down. And the first targets would obviously be, value of the micro composite, which I need to mark, and also the previous month's low. Those will be the first two major targets. So from 55.50 back to 53, and then back toward about 50.70s. Now, that could also lead to more weakness back to composite value as well, because if you're going to reject at an LVN, you got to come back and seek value, and 46.69 is composite value at this time. So I'm honest here saying that this crude is making me very uneasy. It has this trading behavior is atypical. You don't typically see it just sit in a range like this, be very quiet. A 2-point range for weeks on end. You know, you could go back to many months ago where the average day was averaging $2.50 per day of range. And right now we've had a 2-point range over the last X amount of weeks for the most part. That's very strange. And at some point, these participants that are building that energy, one side's going to win, one side's going to lose. Which way are we going to go? So I'd be watching 55.50. That's a major level. If price is able to push through that LVN, 59.5 is the next major target, and 62 is the opposite end of the range. So those are a couple of targets on either end right now, and a couple of levels to watch for crude oil. Could be a big move here coming up, and you know, we'll definitely be on top of it in the room. Let's take a look here at gold futures. Gold has been fantastic to us as well. I know some traders have asked, why are we watching it right now? You know, last year it was incredible, and we've had traders that were making money off of it. I know this was perhaps some of my best trading was in these zones off some of our absorption levels, like here, not quite that one, but this one, this rejection back down, this push back up. All of these levels were so precise here with the absorption signature coming back down. It was incredible. And then things started to fall apart heading into the election, and the election kind of threw everything off balance, and you can see the major sell-off. Now, one thing that got us bullish recently, cautiously bullish, I will admit we were cautiously bullish, but we were bullish, was the fact that this is the impulse range of election night. So it rallied and then it sold off, and it left behind this major key range. That impulse range, once it broke to the downside, it went to the 50% expansion. It broke down below it, made it resistance, and it worked its way down to the 100% expansion. Then the 150, and then the 200% expansion target. It says 250 because it's marking it from the center of the range. So from the election night impulse range, the market sold off 200% of that range precisely to that level. That's why we do our analysis the way we do. Looking at price will tell us everything we need to know. And when it got to 200%, it sat just outside the 100% expansion from a previous key range, formed a little box. I call this the box reversal. When it gets below support and forms a little box and can't go, and then as soon as it pushes up out of that box, that's when we know these late sellers are trapped, and now the buy stops will come out. So our analysis at the time was, if price can push outside of this range and hold, then a retest would offer an additional strength, and we got to be able to hold 145s is what I mentioned. If price can hold above 145, 146.5, we're likely going to come back toward value. And it wasn't easy. It was a choppy little move, but it got there. It got there very, very nicely. It was very impressive. And then since it got there to 1200 and 1205.20, it's now stopped. And so you'll notice that in my pre-market reports, what I've been mentioning is we're probably in a range right now. You know, we stair-stepped down, we formed a box, we trended higher. So after price goes on a price discovery phase and reaches value, you tend to chop above it and below it, above it and below it, above it and below it. Because the market's happily trading around value. That's where there's acceptance. Out here, everyone's nervous and scared, except for those bulls that can come in and push price back up. And it's because those late sellers didn't get paid, so they were forced to cover. And so their buy stops help influence that move back to value. So right now we have this level, 1220, this level, 1180, and 1200 as the key levels to watch in this range. Right now, today, we had a big time bounce off 1200. It was right off the S3 pivot, which is the S3 VWAP band. I call it the PivotBoss bands. It was phenomenal off that level. And it continued well beyond where I thought it could rally. I really thought it was only going to rally back toward about 1204 half, 1205, and it clearly continued onward into 1212s, closing at 1211.70. So big time move back toward the previous month's close off 1200. Now, anytime you get a big rally here, you tend to sit there and be range bound until you can see more expansion from the range. The next upside level to reach, remember we talk about value. Here's value. If it's going to take value bid, the next highest value level is going to be 163.20. So I don't know if we're going to get expansion soon. I mentioned to our group that if price got into 12.20, I'd be cautious, and it could be an opportunity to fade it again. And should price come back to 11.80, it's going to be another opportunity to fade it back up. So right now I'm more in a fade the edges mode with an upward bias. So it's safest to buy pullbacks right now than it is to defend resistance, because eventually, given the uptrending market, eventually this thing's going to break to the upside in all likelihood. Doesn't mean it will happen, it just means that's the most likely scenario given the flow of the market at the moment. So I would say that I'd be cautious on an upside break here. It has to be a major break. If we do see a big break through it and the price runs right through, then there will be a pullback opportunity to get us into 1263. But right now I think, given the current flow, 1263.20 might be the next upside level to reach for. And any pullback into 1180 could still offer an opportunity to squeeze into that target. So those are a few ideas there with regards to gold. I wanted to take a look real quickly at the dollar, and then we can jump into some stocks. So right here, what we were looking at last month, and this was the first trading day of the year. This is the dollar index. And you can see price rallied and set a new high right here last year. So that was the high. It was about 103.50 somethings. And price pushed through that high right here on the first trading day of the year. And look at that big tail that was left behind. Closed back at the midpoint of the day. And I mentioned to our group, wow, that's a big rejection. And typically speaking, when you reject the previous month's high this way, that usually means you're going to come down and test the previous close. And if the previous close goes offered, that usually implies a move all the way to the previous month's low price. And we got there yesterday on the last trading day of the month. So that is something you can take with you all the time. All the time you can take that technique. If you're going to reject the previous high, you've got a date with the close, and if the close goes offered, you've got a date with the low. That could be on a day time frame, a week time frame, a monthly time frame, a yearly time frame. It doesn't matter. That's something that we look for all the time. And the same can be said the opposite way. If you're going to reject the previous low, that means you're going to come back toward the close and perhaps go back toward the high. So right now, price got that move that we were looking for. It took the entire month. As a matter of fact, last Friday, I was talking about this little pullback being a great selling opportunity to accomplish that move. So it was a nice little 2-day drop right into it. And now we're sitting here, inside day. We have the previous close of the month right here at 99.50, basically. The previous month's lows right here. So anytime you have those two levels that are very close, when the close is very close to the high or very close to the low, makes me a little nervous there because there's really nothing, there's clear air, to the opposite side. So I'm watching this very, very closely here. 99.50 is a major level, and if you look at this from a higher time frame standpoint, you'll notice here we have that high, that little price distribution up here, you have a price distribution here, and you have this little trend and distribution here. It resembles a head and shoulder type of pattern, right? Typically speaking, when you trade in a distribution in this way, you have more to do. In this case, it only trended down. So I'm more inclined to think that we will try to work our way back up, and any retest of 102s could be a fantastic selling opportunity. Fantastic. So I'm watching 99.50 very closely to see how it plays out and this low. If there's a rejection here, think something like this, right? When their price just rejects and starts to go the other way. Price rejects and goes the other way. Price rejects, right? These are rejections right there. So when you're seeing these types of rejections, that's when you want to activate. That's when you want to get involved in the market. All the stuff in the middle, That's stuff to avoid. You avoid all the mess, you activate at the edges. Right now we're at an edge. And so I'm going to be very keen to watch to see what happens down here. If price drops down here and all of a sudden trades, and then pops back up, there's going to be a retest opportunity that can get us headed higher back toward 102s. 102 is very, very clear resistance. I would say any test of 102 will be heavily offered for a retest back down toward 99s. And if you fail to hold 99 overall, then the next lowest key levels are going to be down here toward the low of the election day low. So some ideas here with dollar, but very, very solid the way it traded off this previous high to the previous low. Now we have a overlapping lower value relationship, and you can see it been an uptrending, so higher value relationship overall, where value in terms of the pivot range was being formed at higher prices month over month, and then price closes bearish, and now it forms lower. That's a change of bias. So for those of you that have read my book, Secrets of a Pivot Boss, you know that this pivot right here, lower value relationship, typically implies that any bounce is to be a selling opportunity for new lows. And that's part of the reason why I'm saying if this thing goes up back into the range, watch for signs that it could be a selling opportunity back down. The next key levels will be 97, 97, 365, and 97, 91. All right, I found a few stock candidates here that I wanted to cover. I wasn't really impressed with a lot of them, I'll be honest, but I was able to find a few things that are interesting. This one right here is Intel, and Intel right here started the day right here at the previous month's close. So brand new pivots for the month. Here's the previous month's close, that's the dotted line, and price goes offered. And it gets below the previous month's low price, that's this level, and closes back above. Very similar to the dollar, right? The dollar was the opposite side. This is happening on this side. The other thing is, we got a rejection up here, and that was the R25. That's what I call the R25 PivotBoss pivot. It's the 25% expansion of the previous month's range. And it got a major rejection and dropped into this low. And what happened was you get this high, so price goes up, 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 boom, hits a high and can't go anymore and sells off hard until it can't go down anymore and bounces. That's an impulse range right there, an impulse range. And so what I like to do is grab the highest high. So right now it's 38.45. Let's right click that. Let's add a fib extension. Here's the low. The low is 36.02. And then we can bring it back up about right here. 36.02 right there. That's the midpoint of this impulse range. Boom, boom. Once it hits this midpoint, 37.23, and a key range is now set with key levels here, 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 and then you can see the inner 25 above midpoint, inner 25 below midpoint, and here's your 50% expansion, 25% expansion, etc. above and below. That sets the edge for trading, and that gives us a very clear roadmap on how to trade this stock. So what I would say right now is that after the recent rally, we got a little jiggle up and down, then back up, rejection on highs, then back down, rejection down here, then back up, rejection here, and then back down, rejection on these lows. So what I'm saying is this is kind of an expanding range that's building out. So I would say that this one is ripe for an opportunity to bounce it back toward 37.23. Right now we closed at 36.53, so it's not a huge move at the moment. But that sets a key range right there should that bounce occur into that area. And there's the potential to even get back toward highs above 38. Once that midpoint is reached, we're going to have great edges here, and we could see this range become more mature. And so this was a little small wiggle back and forth, but this sets the actual range for trading. And now 38.45 and 36.02 now become the major levels to watch, and fading those edges back and forth will be the main course of action over the next several months, perhaps in this stock. So short term, we'll keep an eye on this. I think that this offers a little bounce opportunity, at least back to 37.23, with a shot at higher prices. And then anytime we get to the edges, it could be a fantastic fade. So this is one to watch. And this one's been fairly active here. It's got some pretty decent moves lately. So not bad. That's the only long candidate I have right now. There are some potential selling candidates here, and one thing I would mention is that given the fact that we're in an uptrending market, you have to be very, very careful because if you get a lot of selling candidates in an uptrending market, they tend not to work out as easily. But when you find the right candidates, at times you can at least get a decent entry. And once you get a good entry and can get to your first target and scale and take some off the table, then it doesn't matter what happens after that because you're protected, you're at break even, and everything's good. So that's why you have to have great trade location. You got to be disciplined and patient to get that great trade location, and then you have to be disciplined about taking that T1 target. So right now, this is another impulse move up. You got to push down and a big impulse move up. Look at the rejection tail that was left behind here. Major rejection tail. This is a kind of a low dollar stock, so be careful. But right here, this high, that's where the rejection occurred. So you had this major move. So you can see there was a price impulse range from here to here, and that left behind a key range. Price dropped below it and formed another distribution here. Then it pushed above it and came back and held it as support, and that implies a move to the opposite end of the key range. And so now we're back into the price distribution between $6 and $8. And so right now, short term, with this impulse move up, you could build another, you could be looking at another push back toward the midpoint of that range to set another key range. So right now, I think we're back into the $6 to $8 zone. And right now, this could offer a quick opportunity back to value and perhaps all the way back towards 6. And if it comes back to 6, it's probably another opportunity to bring it back up, and you may see it trade above and below this VPOC. So right now it's a short-term opportunity down, and should price get into the LVN around $6, it could be another opportunity to bring it back up within the range, because right now it's clear where the price distributions are in this chart, and at the moment, after rallying back above, you usually see this thing pull back some. Here's OCFC. This one is interesting because we had a major rally here lately. Huge, look at that. This thing rallies from $19.50 all the way to 30. And recently, after this huge stair step up, you see this range develop here. We got a breakdown. And then recently, today, we just got a retest of that support. And as we know, once you cross support and retest it and get rejected again, this is a great rejection tail. The tendency there is to continue lower for another leg. So right now this could be a selling opportunity back toward the next LVN. The next LVN down is going to be $27. So right now we're trading $28.52. I would say a pullback, any pullback into 29 would be fantastic. But if this is a real rejection day, then the midpoint is probably the best zone to look for. So 28.77, if price comes into it, that could be an opportunity to sell 28.77s and drop this thing into 27s. That's the next LVN down. So that's a short-term opportunity downward. Keep in mind, it closed below the mid, and this is a rejection day. But if tomorrow, because here, look, we have earnings coming up, so you have to be very careful. I don't like to trade in front of earnings. Let that pass and see what happens. If this thing gaps up above the mid, the trade's off. You never really want it getting above the mid if it's a rejection day. So if price gaps up here, then that opportunity is no longer on the books, right? It's done. Same thing that if this thing opens here and rallies and closes above the mid for the day, then the trade is done. Scratch it. Be done with it. Because odds favor that it will continue going higher through the tail. So, just a couple of things that help you not get into a bad trade. You still have to qualify it properly. So this one has the look and feel of a continuation lower, but with earnings here, you got to be very careful to see what happens, and then you'll be able to engage it. And that's for any of these opportunities. That's why I put those down there at the bottom so I know when earnings is. Here's another opportunity. This one is ORN. And again, I like to trade fades. I like to fade new highs, fade new lows. You can see how this market has faded new highs, faded new lows. And right now, price attempted to hold above the high up here and failed. That was the December high. And then today, price opened below it, came up, tried to find acceptance above 1080s and failed, back down. So typically speaking, this implies a move back to value, value being around 1007, with a shot to see a move into the opposite end of the range, and that's down here. You can see how the market takes out that low and goes up. Comes close to that low and goes up. Then it takes out these lows and goes up. And that's the game. The game is to hunt the stops on both ends of the range. So this could be an opportunity to bring it to value. That's the high odds trade. You got to take the majority of the trade off there and let a portion of the trade trail to the opposite end. But right now, I wouldn't see it getting much past 9. AP is another one. Again, I'm a fan of breaking support, making it resistance, and those types of things. Right here, 16s. You can see how price drove through it and came back. It's been resistance and resistance. That's a rejection tail. We do have higher lows, so you have to be careful here. Higher lows coming into it. But overall, that hold off of 16 to me opens the door of at least retesting this low, which would take you from, say 1565, which is the midpoint, and dropping it to about 14s and perhaps even as low as that LVN. At that point, you might see this thing come back up and trade back towards 16. So you've got to be able to take the trade that the market gives you and then look to reload again the next time. MNK. This is what I call a lower value with a change of bias. So if you look at this chart, you see the pivot range, 1 month to the next it's lower, then the next month is lower, and the next month is lower, and the next month is lower, because you've been in a downtrending market. So every time price bounces in a downtrending market, it's usually offered. Here, try to hold above, then it's offered. Here, hit the offered, right? Well, this one is I call a lower value with a change of bias, because this month you can see the pivot range is lower, but price closed above that pivot range, even slightly, it doesn't matter. That tells you right there that the change of trend may be upon us. And you can see right here, this 48s, price got below it and formed this little box and is now back above it. On the first trading day of the month here, price opened above it, came into it, and was defended and closed back above. So of all the opportunities we've just looked at, this one right here has the best odds, in my opinion, to rally back toward the previous high at around 54s, and perhaps making a run for it all the way back up to composite VPOC, which is 63.84. So this one is one of my favorites right now that we've seen. We've been in a highly bearish trend, but the way that the pivot range is signaling, the way that price is signaling, this all has the look and feel of something that wants to at least return back to the recent edge. Again, that'd be about 54s, and then with a shot to continue onward back to value. So this one is a very, very good opportunity. Lastly, we have TWLO. This is similar. You had a downtrending market, lower value relationship. This was another lower value relationship, and then price closed above that relationship. And then you see today we have a gap up. So this is very similar to the last one. I call this a lower value with a change of bias, and price is pushing up. So this one has the look and feel that it wants to rally back toward 35s. Right now we're trading at about 30. So, this could continue back to this area, but again, once it does, given the downtrending market, you got to be able to take it off the table and trail anything after that. So, at the moment, this has a little bit of strength behind it, given the pivots and the way they situated. Overall, this has been a very bearish instrument, so you have to trade this one with discipline and with proper risk management. Earlier, there's a suggestion to look at NVIDIA. Here's NVIDIA right here. This one has been quite bullish. Look at this thing. I mean, it's been a runaway train. It was down here near 26s, rallied towards 70. That was a huge rally. And then it got even more bullish, and the slope changed even more dramatically. In terms of NVIDIA here, I'd be looking at the impulse range that has just recently traded. So again, here's a push to this low, and then it rallies till it gets that high and pulls back to the mid. That's a really good impulse range there. So I'm going to mark that range real quick. We have a low here, 87.54. Let's add a fib extension tool here, and I've modified this fib extension tool to give me the levels that I want. The high is 119.93. And about right there. So that's the impulse range right now. The midpoint is 103.75 or thereabouts. It's close enough. And you can see today we pushed through the 25% level. This one, to me, obviously continues to trend up. All pullbacks have been buying opportunities. This current strength right now implies that we want to gun for this high and see what it's made of here at 119.93. And beyond it, you have this level at 128.02 and this level at 136.11. Those two are the next two upside levels here based off of this impulse range. Now, there's no guarantee that we're going to go up toward those levels. It all depends on what happens at this level first. If price pushes through it, and the return could be a defense opportunity up. If price rallies into this level here and immediately rejects and forms a tail, then that would be a signal to take it right back to this 103.75. So there's always an if-then-else statement here with the way that we approach the market, because we don't know how the market is going to respond to those new prices, right? We don't know how it's going to respond. So right now, this implies that we at least want to test this high. And depending upon how that test goes, we either continue higher, maybe a pullback is defended for this move, or if there's a rejection at this zone, then that would be a swift opportunity back to 103.75. All right, that pretty much does it. I know I went a little bit over time here. This is a look at our dashboard right here. For those of you that are members, you're familiar with the dashboard, but this dashboard provides a lot of analysis. It provides our tools, it provides training, it provides a lot of different things. For example, if I click on on-demand training here, it'll pop us down to our 10-part executive training series. We have presentation notes. We have, here you can see our PivotBoss methodology overview. We talk about price-based analysis, volume-based analysis, intraday analysis, key range analysis, our pivots, signals, our ADR method targets and indicators, entry techniques, trade management. We have signature setup series. Each of these, it pulls out, you have a whole list. We have a whole lot of training here that everyone can get a hold of. A lot of fantastic content here. Again, $19.95 to get a 2-week trial, and from there, it's only $99 a month to be a part of the room and be a member and have all this analysis. So again, PivotBoss.com. Also, a lot of free content there as well, including the pre-market report. But again, as I always mention, thank you so much for taking the time to hang out with me today. I know your time is very precious, so thanks a lot, and I'll see you all soon. Thanks, chat. That's awesome. I'm so glad. I'm so glad that you're in the room, and any of you that are part of the room. Thank you so much. It's awesome to be a part of that trading room. Great traders, great people, and that's what we're looking for. Really looking for happy people that are positive, that want to engage the market in a like-minded approach and just make money, and that's what we do. So I appreciate all of you. Thank you so much for being a part of it, and I'll see you all soon. Take care, folks.